Good evening, ladies and gentlemen. Today I'm going to be giving you my thoughts on what I believe is going to be happening next in the markets. But I'm not going to wait till the end of the episode to do that. I'm going to tell you right now. I think we are at a point in the markets where we are going to pause out and digest the recent run-up. That's what we're going to talk about on today's Stock Market Brief show, but we're going to get into significant details about why I think that's going to be the case. That doesn't mean that there's not going to be opportunities. There are timestamps in the description below where we're going to be talking about all types of things, including the mega cap stocks, the ones that are driving this rally. Yeah, the NVDA, the Apple, and all that good stuff. SP 500, Russell 2000, Nasdaq 100. We're going to go into some sector spotlight stuff and even give you some trade ideas that I'm seeing in the markets. All that and more on today's Stock Market Brief show. Make sure to check the pinned comments for links to the trading community and also interactive brokers who support this channel. Let's get into it. All right, people, welcome back. So first things first, let's talk about the divergence, the bifurcation in the market. This right here, we're looking at the Nasdaq, the New York Stock Exchange, the Dow Jones Industrial Average, and the SP 500. What you'll notice here is we're seeing on the last 200 days or so, you're starting to see these guys, right? The Nasdaq and then also the S&P 500 crank higher and higher. But the bifurcation, or what we're seeing here as far as the divergence goes, is we're seeing the New York Stock Exchange, a broad market, and then also the Dow Jones Industrial Average are not quite playing catch up in this current rally. And there's a lot of different things going on here. You can even look at something like transports, right? Transports put in a lower high while the Dow Jones Industrial Average has pressed higher, and that actually resolved to the downside. That gave us insight to the original move from this all-time high downwards on the Dow Jones Industrial. If you look at equal weight S&P 500, which is right here, meaning all stocks are, it's not market cap weighted, and then here's the S&P 500 down here. This is cap weighted. Notice how we had this divergence prior, right? A lower high, and that resolved to the downside. And now the market's pressing higher here, but look at equal weight. It's not at all moving, okay? Then take a look over here at something like market breadth, where you look at the percent of stocks above the 50-day and the 200-day moving average. As the S&P 500 presses higher, these have been diverging, and they can diverge for quite some time. You can take a look at the advanced decline line for the for the Nasdaq 100 over here. Okay, this is the cumulative advanced decline line. You can see this is flattened out while the Nasdaq 100 has pressed higher. Take an even look at the cumulative advanced decline line for the S&P 500 down here. You can see that as this has been going down, the market has been going higher. This is quickly what it's telling us is that the internals of the market are weakening, and yet the market drives higher based off of fewer names. Okay, we could take even look at housing index. This is, if you want to get really weird, right? The housing index has been diverging, and the market has been heading higher. And we've seen many divergences play out here, like bullish divergences in the housing market led the S&P 500 higher. Negative divergences a bunch of times here led the S&P 500 lower. As we're talking about that, the market presses higher, and the Nasdaq summation index also identified a potential change in trend, and the market continued to press higher. And even if you take a look here at the Nasdaq McClellan oscillator, the internals here are weak. They're weak, yet the market here is continuing to diverge and press higher. Also, something to note here is the volatility. This is looking at back month versus front month volatility, and we're reaching up to nearly 20%, meaning that back month is 20% higher than front month. And when we reach up into these levels that we've seen in the past, the market has digested, consolidated, pulled back, digested, or actually went up higher, then we kind of pulled in. Okay, even right here, we digested and went sideways here for a while. Even when it was up at this level, we kind of pulled in a little bit there too as well. So when this reaches up into these ranges, it tells me that we could be coming into an area. It doesn't mean that the market's going to crash, right? A lot of people go into that. Oh my God. No, it just means that it could be the area where you might be looking to take some profits and raise stops and start to look elsewhere, because we may have a rotation into various other stocks and not just the big mega cap names. This, what I found interesting, is the put to call ratio right over here on the purple line. And this has been a pretty significant move the prior trading day. And you look back to the left of the screen, and we really haven't seen this low of a reading on this total put to call ratio since November of 2021, and that's when we're going into the bear market. But that doesn't mean that we're going to have a result like that. What I'm pointing out is when we get these readings, you can see that we went through a period of consolidation. It could have resolved higher. It didn't, but it went through a period of consolidation, and we're getting those readings now. I can take another look at this, looking at the S&P 500 call to put gamma ratio. And you can notice that when we have these large spikes as being pointed out on the screen, this also marks a time in the S&P 500 where we can go through consolidations and slight pullbacks. So for example, all these lines that I pointed to, these spikes are the ones that I'm pointing at. You can see I drew those out on the screen. We had one here, right? It pulled in a little bit. Right here, we pulled in a little bit, consolidated, right, for, about a month or so. And then right here, we went up higher, but then we consolidated there too as well. Over here in December, same thing. We consolidated sideways. In May of this year, we consolidated, and now we're right back there at those levels. So we have 1, divergences. 2, we have some interesting readings on back month versus front month. And then 3, our put to call ratios are giving us, and put to call gamma ratio as well is showing us some interesting data. We did have Jerome Powell come out, and as the market moved forward and digested that information, you can see that the market here is trying to price in a rate cut in September. And then also in December, there was a hawkish dot plot stating basically that we'll only be seeing 1 rate cut in the year, but the market is clearly saying that's not the case. And with a hawkish FOMC dot plot, and then also they raised their projections for inflation there too as well. And the market responded to, well, pretty much all-time highs. All right, let's take a look at some of the bonds and yields. I wanted to point out still the S&P 500 correlation to the long-term treasury yield is still a negative correlation, meaning that if the yields drop, the market can go higher. And if the yield rises, the market can fall. And, well, what has the yield been doing these last few trading sessions? On all that macro data, it's been heading lower, and as it's been going lower, the market has been going higher. Take a look at the yield curve. Remains inverted. Obviously, it'll be big news when it uninverts because everyone's going to be covering it, but you can see the yield curve inverted more so in just these prior trading sessions. And as we pointed out before, this is the this is the 10-year yield and the 2-year yield curve where it inverted here, and this is the S&P 500 down here. You'll notice that when it does go deeper into inversion, we've seen the market actually rally. And, well, as we've been going deeper into inversion, what has the market been doing? So if this begs the question, if this starts moving higher, right, the market's probably going to come into a period of digestion. So that's kind of what I see behind the curtain going on right now. But I want to go into some mega cap names now, because if I look at just the last week performance, take a look at what is going on. XLK, XLY, this is very risk on, but XLK is up 5.43%. And you look down to the bottom of the screen, and most of the other sectors, right, the majority of them are all in the red or relatively flat. Okay, so it's a very risk-on environment that we're seeing with XLK and XLY leading the pack, but there is clearly a big divergence here, showing that only a few names are carrying it. And if we take a look here at some of these names, we're going to pay attention to the 15-minute time frames. And I'm going to share with you the weekly expected moves. This is something that I share with the Discord group, my Patreon, right? The link is down there if you want to check it out. Every week, I give these weekly expected moves. And it's basically what, in short, an expected move is what the options markets prices in as far as risk for the following week. And Apple, right? Apple had some AI news. We exploded not only a 2 standard, but a 3 standard deviation move getting outside of it. Now, remember, it's about like a 99% chance, right? 3 standard deviation move, right? If we're talking in terms of a distribution curve, about a 99-point-something% chance that will close underneath 3 standard deviation. And then there's like a 95% probability, right, that will close underneath the 2 standard deviation, and about a 68% probability that we close within, obviously, the weekly expected move there. We're just 1 standard deviation. So Apple has seen this explosive move. It's above a rising 5-day moving average. It got outside of a 3 standard deviation move and seen some absolutely insane volume in the options market. Microsoft, you can see tagged into its 2 standard deviation move, and we're well outside of the weekly expected move here. So no shock that the largest market cap names are what's driving this market, And we need to pay attention to that because as these big moves happen, as the market's mispricing, there could be a period where they settle in, and we need to be aware of that going into not only tomorrow's trading session, but the following trading session. But yes, Microsoft's still above that rising 5-day moving average. Take a look at NVIDIA. NVIDIA is actually roughly just slightly above its weekly expected move and well above an inclining 5-day moving average. And it has a subtle divergence, right? So the market pressed higher here, but you are getting a divergence here in the RSI. So if NVIDIA wants to come in, I mean, that's very, very normal to have happen. And you'd want to see how it would respond around the week to date anchored VWAP. Obviously, we only have one more trading session left, but you'd also want to see if it can hold that rising 5-day moving average. Take a look at Google. Now, these are some of the names that aren't, that are kind of, it's pretty interesting here is because this is also an important name and as far as market cap goes in the S&P 500. And this one is flat, pretty much flat to on the week, right? So this is the weekly expected move. We actually came and tagged it and we started backing off. The 5-day moving average is rather flat to neutral and we closed near the lows of today's trading session, which means we have a wide open risk range going into tomorrow's trading session. So Google, it really right now, it's just Apple, it's Microsoft, and it's NVIDIA that are really driving things. And you look at Google and it's like, well, it hasn't even moved on the week, right? It reversed its entire gain. Take a look at Amazon, same thing. We're slightly down on the week, haven't tagged actually one of the expected moves, and we're below the 5-day moving average that is starting to neutralize right there. And then you take a look at Meta. Meta is up on the week, and we did focus in and around its weekly expected move there, and we're still above that rising 5-day moving average. So as this is kind of consolidating, going sideways, I'd just be cautious if price starts breaking below it, and then it starts rolling over. When the 5-day moving average starts to roll over, that right there would signal that we can have a short-term change in trend where we can go through a longer period of consolidation on the daily time frame. Tesla has been seeing some recent, action these last 2 days, right? We had a nice day over here and then we gapped up and we basically closed near the lows. It's very hard for Tesla apparently to hold any of its gains, but if you're paying attention to weekly expected moves, we actually came into the weekly expected move on the open of this trading session and it just kind of pulled back, not really too aggressively in my opinion, but it pulled back and digested some of that move. So we'll see here if the 5-day moving average can pick up, if it comes back into the week to date, and if it actually sustains itself where we can potentially actually get a nicer move here in Tesla as it's been beaten down pretty much the entire year up until recently where it's been consolidating and trying to find itself a little bit of a base. Let's hop into the S&P 500. Now, the first thing that I want to point out in the S&P 500 is the gamma levels, and this is also kind of goes to my point as to why I think the market can kind of stall out here. First and foremost, this right here is the call wall, right? So 5,500 traders have been reaching up into this area, and this is going to be an important level. It's going to be hard to break from this level if price actually gets up and around there. This right here is 5,450, and then we have 5,400 over here. So I just wanted to show you kind of the size of those gamma levels, and then I'll put them on the chart here. But as you can see, 5,450, price pulled right into that over here, and then we started to back off pretty significantly in the prior trading session, and today we pulled into and around 5,400. So very quick, very easy. This is what I want to say. Below 5,400, right? That's our local support. If we start breaking down that, pay very close attention to 5,350, which is our gamma flip line. We almost came into 5,400. If you're looking at the SPX chart where this by CBOE, we were a point away or 2 points away from it. Okay, now if we can break above 5,450, 5,500 is right up here, which is that larger call wall. Okay, so to get pinned within this range, about 100 point range and digest or pull deeper and then digest, that is kind of where my thought is here on the S&P 500. If we take a look at the SPY on the 15-minute time frame, we're still above a rising 5-day moving average, and we are currently outside of the weekly expected move. And then once again, to note as to why we might stall out is we're also actually at the upper monthly expected move, and it's only halfway through the month. Okay, so as you can see, we came into the upper monthly expected move, which is the orange dash line right here, Okay, and then we backed off and we came right back in. We're holding there. It does not mean that we can't break above it. We did so last month, but the very last day we came, boom, right slamming back into it and then bounced from that level. Now, the weekly expected move on the SPY, that is the higher probability is always coming back in. But as you can see, this, for the last few trading days, we've been actually just doodling completely in and around that level with one more trading day left in the week. Going into tomorrow, our daily expected move is at 539.93, so just call it 540, and then above us at 544.97, so call it 545. Okay, it's okay that we are off a few cents. It's not a big deal. It just gives us an idea for risk. Russell 2000. The Russell 2000 saw a big move into its weekly expected move, and we started to roll off of that level. The 5-day moving average still remains to be declining, so when you're above it, it's bullish, but it's bullish with caution. Okay, so if you are bullish to the IWM, which I was trading this intraday today, and I still have a little bit of a position on, I believe I'd have to double check, but we filled this gap, and I looked to buy into that strength of that candle, and we had some follow through. Now, I'm still very aware this could be a bear flag, and this thing could continue to head lower, okay? The IWM has been working like that. It's been diverging from everything else. However, if we start to see, some of the mega cap take a breather, perhaps we start to get some sort of rotation into smaller caps. That would be the idea right there. Now, for me, I would just have a stop right here or just slightly under the daily expected move for tomorrow's trading session as I looked and I played this. Now, if you're waiting and you're more patient, I would say look to see if we can get above the rising 5-day moving average and perhaps even above the week-to-date anchored VWAP where it stands right there to see some more strength there, because it would be nicer to see the 5-day moving average start to turn up and trend start to put in a higher high and a higher low. Let's take a look at the Nasdaq 100. The Nasdaq 100 is, no surprise here, trading outside of its weekly expected move. The lower daily expected move is actually still out of the weekly level. Now, remember, there's always a higher probability that we come in here. So if we're going to get some volatility, it's typically VIX Crush Fridays, but if we are going to get some volatility, just pay attention to these levels. Even if we pull in and it scares everybody, that would still be above a rising 5-day moving average, and it would be pulling into roughly the week-to-date anchored VWAP. So big tech led the way, currently outside of its weekly expected move. Let's take a look at some sectors. We're going to kind of highlight the bullish percent index. So I just wanted to highlight here the bullish percent index for XLI. This is one that I did trade recently, and I'll show you kind of how I traded it and when I got out, and now I'm looking at it again. We do have a positive divergence in the bullish percent index here. It doesn't necessarily mean that it's going to resolve itself to the upside, but I wanted to call out the higher low in the RSI and then the lower reading in the bullish percent index. And when I look at that and I look at the absolute chart of XLI, you can see here that it did build a base out here at around this trend line prior, and now it's kind of doing around the same thing, moving around. I traded it right here on this day, and I traded to the long side, and I was out that day right there. It was a pretty strong move, and then it reversed itself, and where are we? Well, we're basically still sideways. So as it stands right now, we do have the 20-period moving average curling down. We have the 50-day moving average kind of curling down here too. So it's going to have to recover those quickly to start turning things back around as the trend may be changing here in the very short term. However, with the bullish divergence and potentially this higher low base kind of building out, I'm looking for a break above it to retest this levels and potentially even move itself out of that if the market wants to continue to higher. Now, I like this because we have the base, right? We have a little kind of a consolidation. So if it doesn't break out, I don't need to enter. And if it breaks down, well, I know that I can get out for minimal risk. Bullish percent index for materials here too as well has a bullish divergence forming. You have a lower low, and you have a low and a higher low reading there. And if I look at the absolute chart, I mean, it's been going sideways. I traded materials too this year. I traded it actually right through here. That was one of the trade ideas. It went up, and I pretty much got out right around this day into a declining 20-day moving average. It came in, put in a higher low, and then ripped higher, and now it's still consolidating. And, if this is something that I'd be trading, I'm looking at this kind of zone and range that it's in, and we found some support from it today. But also just note that the 50-day moving average is kind of curling around. The 20-day is starting to curl here too. So it might take some more time, but I just wanted to call that out as it stands. Another interesting chart that I wanted to point out here, was the financials. And the financials also has a divergence as well in the RSI, and that's the bullish percent index again. Now, if I look at XLF, you can see here we did put in a hammer candle today, and price action has been kind of coming off here. Overall, it's really just kind of in a range once again. So I looked into the holdings, right? I would say you can do that for XLI, right? You can do that for XLB there too as well. But I just wanted to give you the example here. You look at the top holding, and that was what I was kind of interested in seeing, right? Berkshire, even JPM, right? Visa, MasterCard, so forth. But I just pulled up the example of Berkshire, and you can see here we're actually contracting quite tightly, and we're at the lower area of this channel of prior support. So are we going to get, bounce from these levels and start to tighten up to potentially move higher? Well, that creates an opportunity to potentially build an early starter size position. And if it goes up, great. And if it tightens up and you play another entry, breakout, that's always an idea. And if it breaks down on the starter position, you just get out for a very small loss. Now, also to note, the 50-day moving average is flattening out. The 20-day is starting to curl over. And obviously, we have a series of lower highs. So if you want to be patient, you want to see, obviously, the higher lows, right, which we're seeing, the higher lows. But then you want to see the higher high get broken, right? You want to see that trend change in the short term. So that's kind of what I'm keeping an eye on there. Let's get into a couple of trade ideas that I haven't shared with anybody yet, but these are some of the names that I've kind of found that look interesting and to me, for the style of how I trade, are setting up. So this one here is BRCC. I believe, if I'm correct, this is Black Rifle Coffee. I believe, I forget the exact name, but BRCC. If you take a look here, we have a couple moving averages on the screen. The ones that I'm looking at here is the 20, the 50, the 200. And what you'll notice here is we're holding the 200-day. The 50 is curling up, and it's been a long time, but the 200-day is now starting to curl up here too. So this would even be interesting to look at on a weekly time frame. This is just the daily chart. But I'm sharing with you here that we had an earnings move right here, and it was a big bullish earnings gap. And right, strong stocks typically get stronger, so you wait for the consolidation. It hasn't really happened. Maybe right here would have been a potential, and then maybe right, it consolidated there. But I'm looking here at since earnings, this right here is getting very, 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 very tight. So a breakout of this might produce another move higher. Now, I'm aware that the 200-day, is kind of disconnected from it. The 50-day is kind of disconnected from it. So, if it breaks out, cool, awesome. But you gotta be willing to get out if it goes against you. And if it sets back up, you can always look to re-enter those type of trades. That's, how I go about it. But that doesn't mean that's how, obviously, anybody else has to go about that. Foot Locker is a retail name, and the reason why I'm showing this one is because there's been a lot of retail names looking great. Okay, a lot of retail names looking great, and Foot Locker had a pretty nice earnings move. However, it did close at the low, near the low, so it reversed its basically the entire earnings, from the high to the low. And I don't necessarily really like that, but I wanted to see how it would consolidate after the fact. And now I'm looking at it, and it's the 200-day. You can see it's kind of flattening out here, and it's holding it so far. The 20-day is starting to turn up right at around that level. The 50-day is flattening out as well, and it's kind of in this flag formation, and it broke out of a larger kind of wedge structure here too on earnings. So to me, I'm looking to potentially trade this. I'll have a stop maybe under trailing the 20, and I'm looking to see if it come back up to around 30 for maybe $5 plus a share per share there. So I like the looks of this. I like how it's setting up, and I may do a starter position prior to breakout, and then if it does start moving out of it, maybe perhaps I'll add into that. And if I get stopped out, well, so what? I don't really care. I get stopped out. It happens all the time. Let's go to the next one. T for AT&T. AT&T saw a nice couple of day trade over here, and it saw some good volume, and it was breaking out of kind of a prior kind of zone that it had a resistance on. And now, I didn't trade the breakout. I was aware of it going on, but I was thinking to myself, okay, well, obviously it's extended. Either I missed it or I wait for it to potentially come back in. And as you can see, price did pull back in here. And now today, right, we hit a low point and we closed near the highs of the trading session. And the 200 days starting to turn up, the 50 days kind of flattening out to going up, and the 20 days still inclining. So perhaps now if we start to see strength from this level, that could be the opportunity to go long and then have a stop underneath the low of today's trading session and then play it for continuation. So you basically get what this is called as a breakout, right? A back test, and then strength thereafter. So that's what you would be kind of paying attention for, or that's what I will be paying attention for. That's all I got for you on today's episode, everybody. Hope that helps out and gives you some insights into what it is that I'm seeing out here in these markets. See you later.